ये सही है देखो. हेलो. हेलो. ठीक है.
चेक 1 2 चेक ऐसा हो रहा है देखो. चेक 1 2 चेक. हाँ चेक चेक चेक. Good evening. Good evening, ladies and gentlemen. Before we start off, a very small request. If we could occupy the front rows, please be kind enough to occupy the front rows. Please. Right. Good evening. My name is Rohit. I'm an analyst at Client First Capital. Welcome to each one of you here at the half-yearly investor meet 2024. To all the viewers on the YouTube live, welcome whichever location you're in time zone. I'll just give you a brief as to what you should expect over the next 45 to 60 minutes. I'll just take a couple of minutes giving you a background as to who we are, what Client First Capital stands for, and then the keynote session will resume. And then finally, we'll culminate with the big surprise, the reveal that we have in store for all of you, right? So Client First Capital, we are a boutique investment firm registered by the Mauritius Financial Services Commission. We have been entrusted with our investors' wealth of around $45 million. And the portfolio in our flagship product, the Founders Portfolio, of which many of you are investors. As for the returns of the portfolio, if you can see, this is our landing page of the website, and it shows year by. We started off in 2020, and 2020 was an exceptional year. Many of you have had the surplus of being with us then. And you can also see one down here, 2022. And we are more than proud to show that on the landing page. That is not generally what is the norm in the industry. And it's very important to understand why the portfolio goes down, which obviously will be taken forward in the discussion later. And as of the last 6 months, it's a comfortable 12.22%, right? That is it about from me. We've all gathered here to listen to the man of the moment, especially today being a Friday. I mean, appreciate each one of you joining in today. I've been trying to come up with some kind of intro for Bhuvan, but just the fact that all of you have assembled here on a Friday evening, the start of the weekend, just shows the energy is palpable. So ladies and gentlemen, please join me in welcoming Mr. Bhuvan Gupta, the fund manager and the founder and CEO of Client First Capital.
Am I audible? Hello. Am I audible? Test. Hello. Am I audible now? Yeah. Rohit, thank you for such a warm welcome. I think more than me, it's also the spouse which is responsible for not being here and on in holiday in India. And I think I'm very happy that all of you would like to interact with you, and we'll have enough and plenty of time. The bar is also open, so even after the event is over on the dais, please feel free to talk to each other and learn from each other's experience and mistakes. So I will have an agenda of telling you what we are not and then what we are. And more or less, we will not talk much about the stocks. I don't have to talk about the returns because you already have seen it, except the investors who came in 2021 peak. And I can assure them that since how they have come back from the par value and they've gone ahead, they'll also double their money in next 2 to 3 years. Obviously, I can't take the guarantee, but this is going to happen because the way we see it, the way we have seen three crashes. So majority of you have made money, and I love seeing the limited partner tag. I hope you also love to see the tag, the limited partner. And I will also talk about why that tag is there. So let's talk about first what we are not. Why am I doing it? Because I'm in a market, or we are in a market where a lot of people approach you every day, and you sometimes think we are a platform provider, sometimes people think we are IBKR, interactive brokers, and sometimes people think we are commission agent. So it's very important to distinguish ourselves so that you can entrust us with more of your wealth and your friends' wealth, and together we can grow. So we also have an agenda that it is not about you versus me, or you versus Client First Capital as a provider or supplier, but it is about us. So now let me start with it. A lot of people tell me, so Bhuvan ji, how do you play with our money? आप हमारे पैसे के साथ कैसे खेलते हैं? So I just want to tell you that we don't play with your money. We are not in the casino business. I think I would have gone to casino once in my life, and I'm a very bad player. But all I can tell you is that we don't play with your money. Investing is our only business. I don't have a part-time bakery or ice cream shop, or I don't invest my money into gold or let's say properties. My money is invested in the strategy, and majority of my wealth, maybe I'm the fourth or fifth largest invested in the strategy. And when my team and I together is managing our money. So we don't play poker with your money. Mutual fund house, we're also not a mutual fund house. With great respect, I'm sure many of you are an SIP investor here. SIP is a great way to save money. However, the issue with SIP is that sometimes it's a black box. So you can actually put a small money every month. It's a very good flexible product. But the only way to know whether the fund is great or not is by looking at the past track record. Where if you are putting $500,000 or $1 million kind of a money, you need something more than that. You need a service, you need a personalized service. You need to know how the strategy is, whether I'm trading, whether I'm leveraging, etc. So mutual fund house is a great start. But as we move forward, you need a personalized service for a bigger ticket. You need a face, and you need to be attended. And that is what I think we have been doing the best. Now, this is something very common. Some of the investors have seen it. And some of the investors have asked me that, Bhuvanji, you give us the guaranteed return and we will invest money with you. Having said that, I think one company has run away. So I don't have to name it, but I'm sure you know the name. How much money they have run away with? Recently, 2 months ago. Khaleej Time News? 70 million. So I'm very unhappy for those investors. We think we are smart, but they're all our kith and kins. I meet at least once in a while. I've been referred by somebody to meet these people, and I am no position to help them because the kind of investment they have done with them, it's a very old game of what Sahara played. It's a very old game of the greater fool theory. It's an old way of, that village is there and one person goes there and he was buying monkeys. It is the same game. So please don't ask for the assured monthly return. Sometimes some investors tell me, if somebody is giving me a check, he is confident. Why should not take it? But if somebody is giving you a check of your capital, he is desperate. He is not confident. So please don't ask for it, because regulators never allow any equity investor or investment manager to even give you a capital guarantee. So if somebody is giving you capital guarantee, run from there. Delete their phone number. This is not possible. And I know cases personally where it has happened, and the money and the person both have run away. And I'm sure it would have happened with you if you'll open up in the networking session. It'll be great because let people learn from your mistake. I'm very happy to share my mistakes. Now we're also not brokers. So I heard word commission. Aapka commission kitna hoga? Bhuvan ji, what will be your commission? We are not a commission agent. And here I want to ask, many of you are my investors. Let me ask you a question. How many shares, if you would have given me money in January 2024, after buying the shares for you, how many time I would have bought and sold the shares? Any guesses? Yeah. uh, So the answer is none. Now that is what it is because the day I'll trade for myself, I'll trade for you. You're very close, by the way, hardly. But this is none. Now why don't we trade? Because our commissions, your commissions, what we get from your commissions is not something what we look for. But when you deal with a broker, and with all due respect, brokers, commissions is what they look for. And when their profits are not aligned with your profit, things start going in a different direction. And the trades and the trades and the trades happen, and then you start liking it and loving it till you lose the amount. So we are not even brokers as well. Now bankers. Now majority of my clients have been a private banking customers. I myself have worked indirectly with a private bank. They are a great place to keep your money as a custody. They're a great place to keep your money out of Sharia. And some of them are also like, I have a very respected banker here. Some of them are good bankers who might also make you good money. But again, the problem here is their incentives are not aligned. So unless you are on a very good safe end, but we are not a banker. So we are not here to keep your money in a custody and just give you 4-5%. We are here to make you double-digit returns. Now traders. Some of you are great traders probably. The traders love to trade. One of the traders. So tell me one trader you know who has become a billionaire trading. Any name? Jim Simons. Okay, Jim Simons is a fund manager. So I think he has made a lot of money by the fund. Now, this one man come to my mind is Rakesh Jhunjhunwala, right? Yes or no? I need response. No. Rakesh Jhunjhunwala made majority of his wealth by remain investing in Titan and Star Health. But he loved trading. And he said, de phatapat, le phatapat, isse better there is nothing in the world. But what happened? That made him become a drunkard. That had made him to have vices like chain smoker. And he used to use hard language. And then he said before he died that I couldn't take care of my health. Please take care of your health. Then think about it. The US market opens at roughly 6 o'clock or 7 o'clock. It is closed by 2 a.m. And if I am trading every day till the night for your money, I am sure my co-founder, my wife will not be here today. So I don't trade also and we are not traders. Now, sometime I also get to hear from you that Bhuvanji will give you more money because you have insider information. So I want to tell you, my name is Bhuvan Gupta, not Rajat Gupta. I hope you got the joke. So, so I do not have any insider information. It's a crime to have insider information. And I don't have that such extraordinary power. I don't use numerologist. I don't use astrologer to predict a company for you. And this is also we are not. Now the last thing. And now why am I using this? Because sometime I get an email that, and I'm sorry I'm using it, but it happens. Though you are a stock investor, you think that I will be protecting your capital every year and the profits. And I get those requests. I am even not that. I cannot control your profits and your principal, but I am still very sure that since you have made money with us, you're going to make tons of money with us. Now, I am not the only one. I am following the footsteps of Warren Buffett and Charlie Munger and many other such value investors. So I'm very sure that this is going to happen, but we are not these all. Now, the question is, I'm sure you're confused now, who are we? And I think there are many names which I can give it to my role, and we are a value investor. Now, what is that? The job of a value investor is to find a hidden gem, find a company which is mispriced. Now, with artificial intelligence, Facebook is actually deciding your next move, correct? Which movie we are going to buy or we're going to watch, and when you call your friend after the second night, I also watched it. Because when the preferences are same, the AI is going to show you the similar kind of movie on the Netflix, let's say. So what happened now? It is even easier for me to find hidden gems. So our job is to discover the hidden gems, and that is called value investor. And I think all of us are a value investor. So Anil is sitting behind. He is buying his goods at a value price. He want to buy, make sure he buys at a low price. Sanjit, who is buying the ingredient for his restaurant, I'm sure he wants to buy them at low price. Nobody here would like to pay overprice. But suddenly when we come to stock market, I think the temptation we are not able to resist. But we are a value investor and we are resisting our temptation. We have learned from our past and from others' past also. Now we are also general partner. This term I have taken or borrowed from the early days when a company co-owned by the partners, where the partners are responsible to give their money and general partners are responsible to invest that money. And that is why the tech limited partner I have given to you. Thank you for wearing it. And I, as a pilot of this particular plane, is also on the same boat. By the way, in last 3 days, markets have fallen, right? You know who lost the most money in the partners? I. Because my profits are linked to your profits. And if it is going down by $3 or $4 million, I am the one who loses the most. So you don't have to worry. If there is a turbulence, I am also sitting in the same plane, but I have experience to land safely for so many times. And I have landed you safely for 3 crashes. And I think I will land you safely in the future also. And there are very basic rules which we follow for that. You can refer our website for the same. Now, we are your partners in growth. Now, will you be okay to trade your reputation for $1 million? Probably not. Now, we think that the biggest risk is of putting my own money. Sorry, the biggest risk is of reputation. And today we are putting our reputation at stake. Generally, clients are not being invited in public. But if you see, the whole strategy of ours is very open. And today also, a lot of clients have got more prospects. And I can proudly tell you, do you have any guesses how many salespeople we have? We had Venus earlier, but now we don't even have Venus. How many salespeople do you think we have? Any guesses? 4, 5, 0. Now I'll answer it. This is a good one. So I am also an employee of the company. From that perspective, Rohit sir is absolutely correct. But I'll answer it differently. So the answer is not 0 and answer is not Bhuvan. Now, in the normal language in the US parlance, we are hedge fund. Now I'm sure hedge fund is like, it feels like proud. Oh, I know I'm dealing with a hedge fund. But we are a long only hedge fund who only buys equities. We would like to appreciate them in the long run. And that is what exactly we do. In the US, hedge fund does a lot of complex activity. Even here, they do a lot of trades. We do not do all that. But we can operate under the license called long only equity hedge fund. So we are the hedge fund. And this is abhi picture baki hai. So now we're also portfolio manager because we manage your portfolio. You give us the right to buy and sell for you. So our whole idea is to work under a mandate. Now we have a 70-point checklist. I'm sure many of you have seen through our website and gone through the presentation. So we have a checklist which we follow. You can always ask us, for example, a very simple checklist says that we invest in a company which is minimum $1 billion valuation. So under a mandate we work, and that is why we are a portfolio manager. In the simplest form, in the US, we are registered investment advisor. Now, what is the responsibility and the role? This also exists in India. But in India, they are curtailed as per the regulation. But in the US, registered investment advisor gets money paid from the clients, and the broker pays on behalf of the client to us. So we get paid through Interactive Brokers, which is our custodian broker, but on behalf of you. So you are our God, you are our Maibap, we make money only through you. This has to be very clear, we're 100% transparent, and you can check your fees in your account. We're not the cheapest in the market, but we also make money when you make money. That makes the whole thing very interesting. And there's a book outside called Ground Rules, which is what Warren Buffett has done in 1957 to 69. I'll recommend you to go through it, and we exactly follow the same rule book. Result matters. Obviously, you make money, we make money, and that is the primary reason that some of the investors have now come to us after 2 years, where I'm sure they would have seen their portfolio going down and coming up, and now it will also become 2x and 3x, because it has to happen. We have seen the highest interest rate in the last 15, 20 years. And now the markets are settling, stabilizing, and we would have seen some returns. Some of you might be thinking, ab yahan se market again might fall. I do not know where it will be, but I'll show you what I think, and then you can have your own opinion. Now, this is something I have called you here today for. We are also your future promoter. Obviously, you have been helping us from the day one. You made money, you got more people, you told them. I think it is the best thing, right? Now, for example, which is the best ice cream in town? Let me ask you. Please respond. Baskin Robin. So now let's say Baskin Robin is a great ice cream. Ganesh says others are not saying it. So what happened? They are promoting. They have enough money to promote, and that's how you one person says and everybody is keeping quiet. For me, the best ice cream is True Fruit. Now, do I need to really be paid by them or given any free offer to promote True Fruit? No. I will just go and tell many people, as many as people I can tell. And that is the best brand. So the reason why I would like to be a promoter, because I want you to also be my shareholder. And that is what now I'm going to talk about you. So we talked about we, now it's about you. Now, obviously you are a customer because you have to be given service. Customer delight is our practice. We listen to you, we hear you out. And in fact, some of the customers are saying, Bhuvanji, book bahut padha diya aapne. So today I think Ashish Bhai was telling that he has gifted 2 books, but I have just read 2 chapters. But I'm happy you read 2 chapters. So the idea here is that customer needs to be educated, and this idea we have taken it from Jeff Bezos. Jeff Bezos strongly feel that their customers are intelligent and smart. We also feel that our customers are intelligent and smart. Our customers understand what is price to earning. Our customer, which you understand what is return on capital. You understand what is intrinsic value. If you do not understand all these, or power of compounding for that matter, we request you to attend my investing classes so we can share that knowledge with you. All we are telling you that if you think that you will give money to somebody and he will just blindly double it, that doesn't work in this world. And if it has to work, then it would have worked for you. So, if you know, what you call till date. And if you have such person, please bring to me. I would also want to learn from him. So all I'm saying is that our customers are intelligent customers. Now, the same thing I covered here. Now, limited partners, which I think is very clear that you have all the rights to ask questions. You have been asking questions. We have been answering each and every question. I don't think so it has ever happened that you ask and we didn't reply. We don't allow you to trade because that is our responsibility. Too many cooks will spoil the soup or the broth. So we don't want that to happen. And this is what we learned in our previous journey. Now, you're also, as I rightly said, your future shareholder, just next to God. And now I'm going to ask you a question again. How many salespeople Client First Capital has? All of you. Thank you. I think a big round of applause for all you have got, the investors. People who are watching it on the YouTube, I want to tell you that you are our brand ambassador. I have no capacity. Let me tell you very openly, sitting here, I have clients in Africa. I'm getting the call to come to London. I've been avoiding it. I'm getting a call to go to Mauritius. I've been avoiding it. I also have a client in Mauritius, all because of you. Client in Australia, client in UK, and clients in America. And soon Client First might also start in America. All it is credit goes to the clients who have entrusted us. They saw our honesty, and that is how it has started. So all I'm saying is that you are the reason why we are here, and somewhere we need to also reward you. And before that, let's understand what you have seen. Till date, from the inception, you have seen 18% CAGR. I totally understand some of you would have not, because you would have not even completed the 4.5 years. So all I will request that meet us. We have been trying to meet again and again. We have annual letters where we have shared this, and we've also rectified that how you can see your returns even going up in 2 to 3 years. Having said that, it is not in my hand, but within 5 years, you will see 15, 14% kind of a return of 5.5. This is something, the power of equity. A very good way to check is go today at home and check your portfolio companies and draw them for the last 5 years or 6 years or 7 years. And you will find out that This is going to happen if it is not happen to you. But majority of you have already achieved it. The presence of yours is itself is telling me. Now you have seen stock market crashes. Some of you are with me for 15 to 18 years. I'm looking for those gentlemen. And we have seen 2008 also together, but 20 definitely we have seen together, and 22 is also now over. So we have survived these crashes because of the simple principle: we don't do margin trading. We don't leverage your money and put into bond to give you higher return at higher risk. Our mantra is lower risk, higher return. And that is what majority of you have seen it. Now, this is very important. I think people are scared of me of this. I have been trying my level best to educate. People tell me I ask so many questions. Maybe you have are habitual of meeting people who talk about the product. We don't want to talk about product because we are do not here to sell your product, make our commissions, and then see you only after 3 or 4 years. And that is why we do a lot of education, and we would love to talk to you about generational wealth. And if still it is lesser, so many books are out there. Please take photos, read them. I think Ashish Bhai was giving me an idea that every week we should talk about a book in our podcast. Soon maybe we'll do that in a month or something. But all we have learned is through books. And I again invite you from this podium to join me in Berkshire Hathaway event. Shantanu, you have joined me last year. How was the experience? Yeah. So 27,000 people attended. Please speak to Shantanu because when I will tell you, you will feel like selling. But he will tell you, Warren Buffett is 94 years old. I'm very fortunate that my wife has joined me last year with my children. US visa is also a problem, but now he's 94 years old. It's not about how much money he's made for the people. It's not about how much wealth he has. His net worth is $138 billion. The most important thing is at 94 years, he is running the company and responding to people. Are we going to do that? And I think that is what is driving me today. What is driving me today is the independence of my children, independence of my wife. If tomorrow I am not there in this dice to speak, we all never think about death, but then an insurance agent comes and sells an insurance policy. But still, after that, what your wife will do, she will do fixed deposit with your money. And I don't want that to happen. The one thing, I don't want my wife to go back. Second thing, and I don't want you to withdraw your money. So for that, I have done enough provision. But then the most important thing is this education. And I think today, because of your help, you have seen a homegrown brand. You can definitely make 15% on your own. I promise you. You can definitely make 15 to 20% in India with other PMS provider. But you have made this brand. The kind of personal feeling you are having with us, I can promise you will not have with any other provider. Because you have been the instrumental in our journey, and that is why I'm not leaving you. I have 12 investors who have been pressurizing me to take money in the company to grow to the next level. But I am still saying no. In fact, I want to tell you 4 years ago, or 5 years ago, one gentleman gave me $750,000. I kept it for 2 years and I returned the money back. I said, no, I don't need your money. I think I need a team. And that team I built in the last 5 years. And now I have a good team to take it forward. But I'm still not ready to take your money. With God's grace, even I have made good money. The idea is to take your money. Why I will take your money, that also I'll tell you. Now, that's the future. Now, before even we talk about the future, let's talk about the portfolio future. I'm sure how many of you are interested to know where the stock market will end this year? If you're not interested, I'll not tell you. So first answer to you is please don't be short term, but it's our nature. 17, 18% is already been made. Now, obviously, you don't want to lose your return, right? And then election. So I have been asked, I think Sanjit's father asked me, what will happen in the election? So I thought he's talking about India election. So I said, India election? No, no, that is given thing. What about US election? And I said, I really don't care. And I'm happy I said that because Joe Biden has now withdrawn. But the biggest risk today is, what if we forgot about it? So the election and market are really not correlated for me, at least. And the more or the sooner you will also get over of it, you will be able to sell your property in Bombay, a flat which is not growing, and you will be able to put it at 15-20% returns. And I think Ganesh is laughing, is smiling at me. So these are the 4 things about the future as long as the strategy is concerned. I am sure today in the evening at the bar we can discuss how my properties are not being sold. Everybody has that pain. So gold is going up. How many of you agree to me? Okay. If you want to know more about it, We'll discuss outside. I have discussed this. So I think we have enough counter-cyclical company, the gold mining company. If you go and check your portfolio, it is already 45% up this year. And it might become 500% up. That is what the history is telling. I'm sure we have discussed this enough, so I'll skip it. Now, these three things are important. And how many of you think we're in bubble? Kapil? Oh, Rajesh bhai, bubble. Okay, it's strange, no? You think you're in bubble, they still give us money. So, so yeah, but that bubble is still far. Bubble is not easy. We have the memory of 2022 is not yet over. Bubble means your complete euphoria. I don't see that complete euphoria right now. And even if you go in the fear and greed index, we're in the neutral zone. Having said that, it might come. You never know. But let's talk about the election and stock market timing. Now, which month every year election are done in America? We all know that. Huh? Very good. November 3, the election are November 3 to November 4, based on the holiday. Pre-election month is October. Post-election month is November. Last 20 years data, except 2 year, market has been negative for the month. And I have not done much effort for this. ChatGPT will tell you. This is how you should do ChatGPT. But those 2 year, when the market this has fallen, what has happened? So one good thing is, if October market doesn't fall, and the month is positive, you know that November and December will be positive for people who are love timing. I don't fall in this criteria. But those year, if you see, gold has done phenomenal well for the year. Okay, so this is how the election impacts. So if I look at the 20-year data, twice it has happened. Why should I bother? Now maybe you would like to love to sell and buy because still Dubai is not taxing our capital gain. But if you would have been in India, you will think other way around. And that is why I'm telling you these things don't really matter in the long run. Now bubble. This is my reading. There is no prediction. We don't love prediction. Only two people know the future. One is the God and the other is liar, not lawyer. So bubble. Now this also I wrote an article on LinkedIn. Obviously it is 4 months old. Now this is a very beautiful data analysis. So in the last 20 years or so, whenever the Fed rate has peaked, market has crashed. Do you understand, or do we understand why market crashes after the Fed rate peaks? It basically, the FD rates are higher, so stock has to adjust. And the expectation of the market is, let's say, X, and the Fed rate goes Y, which is above X. What happens is the market has to adjust. So corrections are healthy. But since we are always leverage, margin trading, etc., we love it, so market falls further. So what happened in 1979, the Fed rate goes to 20%. And then it stays there, and then it comes down. 1982 to 87 is the period when the S&P 500 bottomed out in somewhere in 1982. And that bottom value is 102. From there, minimum 5 years market, before the next crash in 87, market peaked at 336, which is total return of 229%. Similarly, in 1990 and 2002 and 8 and 22. Now, what can you judge from this data? The last time the stock market crashed was 2022. Fed rate got peaked in 23, Feb 23. This is October 22. And the Fed rate this time was 5.5. What was the lower number of S&P in 2022? It's there on the screen. 3,583. What is the S&P 500 right now? Correct. Now from this historical analysis, what can we guess? The minimum time a bubble will take is either 5 or 10 or 5 or 12 years. So let's say 5. The minimum, right? Because we are thinking of a bubble. And what is the minimum return we have made before the bubble busted? 100%. Thank you. How much have we made from the bottom? from 3,500 to 4,500, roughly 33, 5,400, roughly 60, 65. So we still have 35% left. But if bubble busted, the gold will go up. So let the bubble burst. Both the scenarios are good for us. Having said that, will bubble will burst, a lot of people will lose money because they're in margin trading, so I don't want that to happen. But the data is telling that we are still far from bubble. Understood? Any question? Now, we and you have become us. I think enough of knowing how it will work. We're always open. Please come and talk to us again. I think you always been running out of the time. We always had a lot of time for you to meet and explain again and again. Our role is to help you with the time and stress which you have, because even I cannot focus beyond the founder's portfolio strategy. So what we help you with is the time and stress, which is what we save you. Now, today, and I'm sure some of you have already, many of you have got the email from us, $100 million vision is what we have. Now, why $100 million? The one reason, and before that, let me tell you where we are today. We are at $45 million, 2 million here and there. The roughly $10 to $15 million is in talk already, so roughly $10 million will achieve more. And $10 to $15 million is what we are expecting. Please come. $10 to $15 million we are expecting the profits in the next 1.5 or 2 years, which I can't really guarantee. So roughly we are short by $25 million. Our strategy or our value investing method is warranting that you can put large amount at work. And I think all of you, when you have met me in the first meeting, I show you what? Do I show you a product? What do I show you? People who are our investors. Rajesh bhai, you still have to meet us for that. People who have become our investors, I show you in the first meeting something I show you. What is that? So I think we need to do it again and again. Proof of concept, if you remember. In the proof of concept, we tell you how simple the investing is, and the timing is of no use. Over a 5 to 10 year period, the money has to be made. And if I replace the company which you have taken from a daily life, if I use the quality companies, I think 5 times or 4 times is warranted. And that is what I do. So now $100 million vision is because you should make a lot of money with us, because we are in Dubai, first of all. So I'm sorry if you know anybody who you have the number, who's a fund manager based in Dubai. I'm sorry, I don't think, even I did not find one. So that is also one reason. The second is, this will help us to go to the next level where the family offices will be, we'll attract them and we'll be able to cut a 5 million check. And with that, we will be able to come back to you and allow you to invest in our company. Now, let me tell you, I'm saying allow you to invest in my company or our company. Why? Today, we all love to invest in startups. And now Rakesh ji is here. He's one of the very experienced startup investor. And I hope his experience has been great. But what my theory says is, if I am a great startup, why will I go for a small ticket? I will go for a bigger ticket to Adia, or let's say Mohandas Pai, or Jeff Bezos Ventures. So what are we getting? We're getting rejected mal. We're getting a rejected deal. And out of that, we're trying to make a sense. Maybe we'll get a good deal also because of some friendship, etc. So my idea is that I want to become a startup which is debt-free, does not burn money, being profitable from day one. And if at all you want to invest, because I can get the money from outside, I can get the money from 3 investors. I have raised 45, I can raise $2 or $3 million right away for our company. But then I would like to put this to all of you, that all of us together can do it, because I just don't need the money. I need your company as well. I need you to also come with me to NASDAQ and list our company for the benefit of all of us. This will also help us to align the stakeholder concept, which is the customer, investor, and shareholder are the same entity. And there is no force. Some of you will not be ready for it. Somebody need more information. But all I'm saying is that today family offices are dying to get to a company which is profitable, growing at 30-35%. So we were managing $6 million in 2020, and today we're managing $45 million. You can calculate the CAGR. this is my promise to you. A debt-free company with highest corporate governance, and practically we don't need the money. But with your money, we can do better. We can have even more strategies for you. We can give you better technology also. This is what something I propose to all of you. And I'm sure when I was doing the research for a particular fund and I was talking to one of my investors, I realized that how much information the investors don't even know. And they're the best investors, where we are so open about everything and we talk about it and we show it to you, where a lot of fees are not even told to you. So I can promise you this, that we are the most transparent company in terms of the fees, in terms of the way we operate. And with your help, we can certainly reach $100 million. And from there, we want to reach $1 billion AUM. But then we'll have great people with us. We can have a family office's money and we can definitely reach there. I think I've already told about the stakeholder alignment. This is very important. Leave this for a moment, but think about this for a moment. Now, some of you have entrusted your retirement money with us. Many times, an advisor tell me, sir, client will not sell his property. So he want to give an SIP. I am telling you, why will you not sell a property? Don't give it to me, put into mutual fund, but please understand that if your property is growing at 5%, that money has to work at 15%. And if education is the issue, I am available for free of cost. So this is something very important for all of us. This part of the world has become a trader because taxation is not there. This part of the world put into properties because of, I don't know what reason. Yes, properties have done great. If you know how to do it, please do that also. I'm not against any other asset class. But just putting in a money in a flat where we are not gonna stay and it is not even making money. So this is, I have a request that you should think about it. I'm seriously thinking about it for me also. Now this is, I'm sure everybody will love it. In the long run, when you will become a shareholder or the volume will take place, your fee can practically go to zero. And that's what exactly Warren Buffett did from partnership to Berkshire Hathaway shareholder. The fee became zero. So Jeff Bezos also, when he established his company, he made this company around two factors, and they call moat. And that is the time factor and the price factor. And he said, nobody will call him after 2 years and say, Jeff, do one thing, give me this iPhone at $5,000 instead of $4,000 and send it to me after 6 months. So this technology company, he built around two things. One is the faster delivery and the lower price. And I think we can do that. Once we reach the volume, we can do that. And I'm sure you all have a support on that. This I have already discussed. Future opportunities. So I was talking about True Fruit ice cream. Now Baskin Robbins definitely will not take my investment. But let's say some of your company is doing great, you have a great balance sheet, and you are growing. But at the end of the day, you also need to free up your liquidity. And this example I'll give you of the Baska Furniture Mart. I don't know how many of you have read about Warren Buffett. There's a lady who died at the age of 104. She was absolutely illiterate. And Warren Buffett cut a check to her. And that company today has delivered billions for Berkshire Hathaway. And that company is Nebraska Furniture Mart. So when we have more money, it can come back to you. Obviously, it has to be on a merit. And this is also possible that we can invest tomorrow in the non-listed space. Now, crucial step, the immediate action plan is we achieve $1 million in FP. We focus on the process. Some of you have already achieved $1 million. Please try and take it to $2 million. People who cannot achieve $1 million and they are employees of the companies, we're happy to have a $500,000 threshold because we don't want to become mass market. It is practically impossible to deal with a mass market thing. I also want to tell you a lot of $25,000 deals we have rejected because if you just want to make money, ETFs are there. And I think many of you know how to invest in stock. But when it is about putting large amount at work, then you need somebody who is focused. And obviously, if I need to buy a property, I need to focus, or maybe a jewelry, I have to go to Rajesh ji, and then he will help me because however I read it, he is into it for last 30, 40 years. Refer more friends. Thank you for bringing friends. Today only you've got them. And bring more friends. And this is the only way people will open up. I think the Britishers have closed our eyes for long. And here I have a question for you again. Last time I asked you the first listed company, right? Are you aware? That's East India Company. Now let me ask you the first bankrupt company. And you have a prize for it. The first bankrupt company in the world. No problem. Now, okay. I can't tear a book and keep it to myself. So definitely we'll have more questions. So attend the value investing masterclass. Please feel free to attend it. We're going to extend it to the India concept. We're going to talk about the behavior investing. We'll also cover the forensic. And believe it, whatever you will learn in the masterclass will also help you to run your own business pretty well. It'll also help you to invest in the other companies. And I'm surprised. Praveen sir came all the way one day. I was in the masterclass. I take my masterclass here only, and he was in the class. No, it was very good to see that such investors are here with us who would like to learn how investing works. It will not make you to become fund manager overnight because 20,000 hours we have given, but it will make you more confident. Some of the investors have been asking the same question again and again. We want you to come to the next level. Nobody can time the market. Yeah, we can time the stock, and that is what we have been now doing it. But you can't time the market. Now, this is the biggest surprise of today, and we would like you to extend, and some of the investors have already met for the India fund. I think it is again your demand. I think your heart goes to India, our heart goes to India. And India is the second best market in the world, or maybe you can say the best market in the world after America. And their markets are actually same. The Indians are working for Americans, Indians are working for Indian corporate, and I think we can make money both the places. So as long as the money is being made with a lower risk, you can also invest and diversify with us. Now, before even so let me introduce. Are we ready for the pop-ups? Rohit, are we ready the pop-ups? They're there. Okay, no problem. So I would like you to give a round of applause. The name of the India fund is Dharohar Capital Partners. So Client First is entering into a venture called Dharohar Capital Partners, and it is a marriage made in, I will say, on Zoom, in heaven, and we'll discuss. I think I'll leave it to my friend to talk more about it, but let me introduce the team first. This man, Ken Majumdar, who is a Harvard graduate, who is a CIO of a company called Ridgewood Investments. He has been going to Warren Buffett Berkshire Hathaway conference for the last 20 years. He met me in a value investing conference, and he was behind me for the last 1 year to start India Fund for his investors in the US and definitely my investors here. And I have been telling him that I will do it at $100 million AUM. But then he was so adamant. And then I said, okay, he's a great guy, he's a good person. We met again in the US. And then this was incepting for the last 1 year. And then what happened, I'm sure Rohit, so let me introduce Rohit also. So Rohit, now the responsibility is increasing for him. He will not only be looking for a great company in founders portfolio, he'll also be instrumental in Indian companies for you. So Rohit is a very common face. He's also done Vipassana just now, so you can talk about Vipassana also. Now, मेरे बारे में तो सबको आपको you know. Now coming to this man, Mohan Nanwani, who is the head research of investment for Dharohar Capital Partners. Now, in the meantime, when Kane, whose net worth will be roughly $50 million, and Bhuvan, they were discussing about it, who will run it? Because it needs tremendous focus. And for the last 6 years, I was telling Mohan to come and join us. He has been investing himself in the stock market. He's been investing for a lot of other people. He is my childhood friend we have studied together in the primary school. And he hails from Khandwa. The great thing is he's an avid reader. And we both have been, I think, topping the class ANB. That is the most important thing. And if you ask me my achievement, yes, one achievement is to run this company profitably and make money for you. The most important achievement for me is to have my wife with me as a co-founder. I'm sure you agree to that. Thank you. And the second most important achievement for me today is to have my childhood friend working with me. Now, he has definitely worked with Jeff Bezos, or let's say Amazon, where Amazon understand how to rule the world. And he has worked with I think, in the India also. So please help me welcoming Mohan on the stage to walk us through the India Fund.
Hello. Hello. Thank you. Thank you so much, Bhuvan, for such a warm welcome. I think after my mother, no one has praised me so much in my life. So, what I'm going to do is I'm going to cut this piece and share it with my wife. Yeah. So, thank you very much. Thank you very much, everyone, to come over here. And I will just introduce the company that we have formed, recently formed. Dharohar. Dharohar, as the main name suggests, means heritage and legacy. It also means to be in the custody of someone. Sometimes, what we do in India is we protect, preserve our traditions, heritage, and then we pass on to the future generations. And that is why we kind of formed the Dharohar Capital Partners. Primary focus is to leverage the India growth story. However, we also want to do the same thing, preserve, protect, and then grow generational wealth for all of you. Our logo, like it suggests, it is going to be focused on India. Dharohar is signifying India in all its three true colors. So, like I told you, the biggest part is that we want to leverage the India growth story, and I think most of us are in one way or another connected with India, and everyone talks about the India growth story. So, what is India growth story? For me, this is the only market in the world which has some overarching trends. What are those trends? The biggest one for me in the beginning is the political stability, which is having a strong leadership. We are very lucky, I think I would say, that is my personal opinion. People have different political opinions. That we at least got the government which will complete again its term. That is my own belief. We had a government which completed in, which was in a single party majority, which resulted in good governance, which also resulted in strong leadership, and it resulted in continuity of policy. One of the best reforms which we probably don't understand is not appreciate that much is that they started with insolvency code for the companies, and it has resulted in cleanup of so many companies and ensured that people don't run away. Now people, when the company goes bankrupt, they don't go to the court. They say that we will repay the loan or we will buy back the company. So companies have stopped going bankrupt because bankruptcy code is one of the biggest reforms that we have not realized, but the capital market is appreciating that. It is one of the biggest reason why we have seen continuous rise. And the cleanup that has happened in the public sector enterprises, that has continued. That's why I am using the word continuity of policy. Had it had this government not been formed, all our dreams, people who have invested in and got made a lot of money would have at least stopped for the next 1 year. But I'm happy that it didn't happen, and we have kind of resumed the bull run as far as India is concerned. Uh, One question that Bhuvan often gets asked, and in fact I am asked even more than him, is that has the market made the top? I don't know whether the market has made the top or not, and I also don't know how much it will fall once there are some negative surprises coming our way. But what I actually know is that our SIP inflows, that is the money that is continuously coming in. It is not the money that will run away. It is the money that is continuously coming to us is $2.4 billion. It is a monthly amount that is coming in. I have seen the times when if the FIIs had sold $500 million, the market will not recover for 1 month because such was an impact. But today we have such a big cushion that even if the market falls, it again starts going up because there is so much of money waiting on the outside, waiting the market to fall. But this money will not allow it to fall to a certain level. It will still support, but it will support only qualitative businesses and not everything that has risen up with the tide. One major part also that works in our favor for India growth story is that currently in India, though we are seeing investments from all around the world flowing into India, is that only 3% of our Indian households are currently invested. This has seen a phenomenal rise in the last 4 years. We all know that how people have got addicted to stock market. But still, if you talk about the investment, I think 3% is a very small number. Once it increases by even 1 more percent, the markets are going to go double from the current levels all across the board. Definitely some companies will grow multifold, but overall market will also have a very good view. Having said that, all these four things may change, which will reduce the impact that we are currently seeing. But what will not going to change and is an irreversible trend in our favor is our demographic dividend. We all know what demographic dividend is, but again to reiterate the point, demographic dividend is the additional growth that the economy will have because we have a certain working age population that will keep paying us those dividends. An interesting fact is that average age, working age of Indians is 28 years. Just to set the context, the same age for China is 38 years. For the next 50 years, India will be the youngest working nation in the world. For the next 50 years, I'm sure. I'm not sure how it will pan out after that. These are all statistics released by all the different fund houses. And one recent thing which I just got to know today is that India is providing the most number of labor in the world market. More than 25% of the new labor that is joining the market is Indian. And to top up on that, the labor cost of India is only 12% of what China is supposed to pay to its labor. They have $7.1 per hour labor cost. We have only $0.8. So that China plus one strategy that was initiated is going to reap rich dividends in the coming days. We are going to see a scenario where we will have our manufacturing, which has continued a good run, to keep doing well. And we are very well placed on both the terms because we are not only increasing our labor manpower, but we are also having a cost advantage associated with us. In and all, a right catalyst, for me, I would term that right catalyst to be a political stability and the continuity of our government's policies, which has actually turned the potential energy into the kinetic energy. I think most of you know the concept, but it essentially means that there is a stone which is at the top, which was sitting at the top of a mountain. Someone has just given it a push. Just like the Joker says to Batman, what you need is just a small push. And that push has been provided by the leadership that we have. And we are starting with the virtuous cycle for Indian economy. I am sure that it will last for next 2 to 3 decades. And I hope to have that journey continue with you, all of you together. We will definitely have Q&As, and I think most of the people have this discussion on the India growth story. What we are launching with Dharohar Capital Partners is our Anant India Growth Fund. We all know what Anant is. It is going to be focused on India as a geography. Coincidentally, daughter of Bhuvan's daughter's name is also Ananta. So they kind of share the similar meaning. Just giving a small background about what we are going to do with AIGF is, we want to invest in companies that are primed for an orbital change. By orbital change, I mean the companies that are into mid cap or they are small cap. We want to invest in those companies which have the potential to change into a large cap or from small cap to a mid cap company. But we want to invest in the early life cycle stage. Almost all the individual investors or the family houses that manage the money and they have made it huge in terms of X times rather than in terms of percentage, follow this rule that they want to invest in a company at the early stages of their life cycle. Our investment strategy is quite simple. I will not delve much into it, but what I want to focus on is that our portfolio will have very low mortality rate. I want to keep it to 0. Everyone aspires it to be 0. Mortality means when we are doing great risk management. So how does the good money gets made? How does the big money gets made? The big money gets made by following 2 rules of investing. One is allocation. When you find a good opportunity, your allocation should be good. I know one of my friend who has got a 100x bagger in his stock portfolio even today, but he happened to invest only 10,000 rupees in that. But he is happy, but he would have been the happiest person if he would have invested his original amount that he normally invests. He normally invests around 5 lakh to 10 lakhs in one company. He is a retail investor just like me. But real money is made when you allocate good to your conviction. That is what we are all about. That is what Bhuvan has been saying here, that you can borrow the idea, but you can't borrow the conviction. Once you have got a good conviction, you invest heavily in in those companies, and that is how big money is made. But the second part of it is, the second rule of making good money is when you manage your risk well, risk management. And I I will try my best. We already have prepared a 72 points checklist, which will ensure that we don't get into a company which will go to zero. So that again brings back to the basics. The rule number 1, that never lose your money, and the rule number 2, that don't forget the rule number 1. So we would want to allocate it well whenever we have get a conviction, but we will never get into a company which has a mortality risk associated with that. Now this brings us to the overall investment philosophy that we will follow. Our investment philosophy is going to be growth biased. What is growth biasness? So there is a simple concept which everyone says, that I am a value investor and I want to invest in a company which is available at a reasonable price. But that reasonable price company should be a company for me which is going to grow multifold in the medium to long term. By medium to long term, I don't mean in next 2 to 3 quarters. What I mean is in next 5 years to a decade. If that is medium term for me, and more than a decade is going to be a long term something for me. One more aspect of the investing is that people want to time the market. Sometimes they are able to do, sometimes they are lucky. Some people are geniuses. I am definitely not a genius, and my life has not been very lucky. So I don't think that my stock picks will be something that I will make good money in cyclicals. So I'm never going to invest in cyclicals, but even if I do, I will be very, very selective. Cyclical businesses are businesses where you make good money in 1 year, but next 10 years are like you are not going to make any money. Unless and until you have a thesis that after 11th year it is going to be playing out, we avoid cyclical businesses. So the growth philosophy, the basis is going to be the risk management. It is actually the investment management. We often talk about risk management, but risk management is not the part of your investment, but it is actually the overall investment management only. We discussed about growth at reasonable price, but what I want to emphasize here, which I explained earlier, is that our growth should be sustainable and qualitative. A qualitative growth means a company which will not get impacted by smart upheavals coming in their way. They should be able to have a good free cash flow. The quantitative aspect should be right in terms of ratios. They should be able to have some moat and raise the price without affecting the demand of the company. So the growth should always be there, but it should be sustainable and qualitative growth. By sustainability, we don't mean here that they should be an ESG compliant company. By sustainability, we mean they should be able to sustain the qualitative growth that they have displayed in the past. I talked about in detail about risk management. There are different kinds of risk. We will not go into the details. I know that the energy levels are going down. But if you have any queries, we can answer that in our Q&A session. These are different kind of risks. We define those risks before we take a company in our investable universe. So basically, how do we construct a portfolio? We create an investable universe which has covered all the parameters that we look at. And out of that investable universe, we select certain companies where we create a portfolio. And this investable universe keeps getting monitored. The portfolio gets monitored even more regularly for all the companies. So all these 7 kind of risks, any company that falls into that category will not be a part of investable universe itself. Before we go to the portfolio, we will ensure that these companies are not part of our investable universe. Then we come to something which is known as a secret ingredient for the recipe. I am not sure how many of you would have seen this image. This is from Kung Fu Panda. He is Bird Dad, this Kung Fu Panda. He runs a restaurant and he makes soup, and that soup or noodles is so good that everyone comes and has it. But there is a secret ingredient in that soup that nobody is able to sell it outside of his own restaurant. We can discuss in detail in person, but what we are going to do is we are going to be doing following a strategy on the selective stocks that we will have, which actually allows us to reduce our cost. So I will give you a very known example. ITC. ITC as a company was a meme stock. It was a darling of social media posts, at least till 2 years back. Whenever you go on Twitter, whenever you go on WhatsApp, people will say there are only three certainties in the world. The first is death, the second is income tax, and the third one is ITC being at 200 rupees. But you know what? I know fund houses during those 3 to 4 years period, they kept on investing at 200 rupees in ITC. 180 to 220 was their range. They reduced their cost from 200 to 110 rupees by following this strategy, and these are very known fund houses. And when the real time came up from 110 to now 500, they have made outsized return in this company. One of the best things about companies like ITC and Coal India is that you can keep having them. You will reap the rewards of dividend on regular basis, and with this strategy we keep reducing our costs, which ensures that while you are not making money, you are reducing your cost, but thus increasing the units that you continue to carry, and when the time comes up, you make outsized returns. So that is one of the advantages of that secret ingredient. One good thing that we are doing is we are launching this as a fund. It is not an activity where for an A customer there is a portfolio, for B, C, D there are 3 other different portfolios. We will have one single portfolio. So suppose tomorrow there is an opportunity which comes in, say in the form of a pharma company where we feel which is destined to do well in future, and we invest in that pharma company, the rewards are shared among all the stakeholders. So it will not be that in one portfolio that pharma company I have bought, in another 3 portfolio I have not bought it. Once I buy it, it is giving the benefit to all of you, and definitely if it doesn't do well, it will affect all the portfolios. So that is one of the advantages of the way this is structured. And probably that's it from me, but we are open for Q&A, and Bhuvan will also be available here if you have any questions to him also. Sir, kuch puch rahe. Is it an AI? Yeah.
So it is basically a Mauritius-based structure. So it's a fund, and that the fund will be FPI registered with the SEBI. So it's a fund from Mauritius. Dollars. In dollars, yeah. We can do SIP, but obviously the regulation of the funds are like $100,000 minimum. At our internal level, it is $500,000. So definitely we would like to look at a $500,000 picture. If that can happen in a year's time or 2 years' time, SIP can be taken. $500,000 per person. It's okay. Please, yeah, Ganesh. So fund size is not important, Ganesh. Okay, one thing I want to tell you, we do not want to become the biggest. The problem what Warren Buffett has is something different. People look at his $180 billion cash and think that today is the time to be in cash. He himself said in 1980 that if I'm a small fund manager, I would have killed the Dow and made 50%. I was short of that by 6% in 2020. So fund size is not important. Obviously, from the sustainability point, we look at $50 million baby to be become in next 3 years. And obviously $25 million will come from the US. So, but that fund size is not important.
Is there a time period when you close the fund?
No, it's an open-ended fund. It's a monthly NAV. Many of the majority of the Mauritius-based fund or the Singapore-based fund, they have a monthly NAV. We can actually have a daily NAV. We can have a daily redemption, but it increases the admin cost, one. And secondly, we don't want to attract short-term capital.
Did you not set up a fund in Nifty and not in Mauritius?
Gift, you said. Yeah, so it's a very simple thing. We are very much comfortable with Mauritius. The biggest fund manager of UK, his name is Terry Smith. He manages $13 billion from Mauritius. He stays in Mauritius for 6 months. So I think it's a matter of choice. The gift will take 3 to 4 months. It's new for us. A lot of people are moving between the Singapore and gift and Mauritius. We are very much comfortable. I think Mauritius is still a preferred route. So it should not worry the investors because at the end of the day, money is going to be in SBI because at the end of the day, Indian currency is getting invested. And tomorrow, if you will help us with $100 million, we'll also give you a gift and Singapore route. So there is no issue with the. I don't see any problem with Mauritius, but obviously we have explored everything. For example, why are not we in DIFC? The answer is it is very high cost, very difficult to accommodate investors to start with $100,000 to make a million. So I think Warren has operated from Omaha. I have been operating from Bardubai, and I'm very happy with that. I want to keep the cost low, but if it is possible to go to gift in a manner which is conducive to us, we would have gone. But let's say the fund size increases, we'll look into it.
So Bhuvan,
Huh.
you are obviously promoting founders portfolio as well as you are here. If I have investable fund, where you will recommend?
Okay, so I am going to invest in both the company, both the stock portfolio. It's very simple. I have been telling this again and again. Today you look at Nifty's return for this year and you look at S&P 500 return. You buy garbage in America, you will not make money. You buy garbage in India, you will not make money. So it is very simple. I have 2 children. I cannot be biased to each other. Obviously, China is not my choice. I think I have already opened about it in the last year. So if you prefer to be in India, please invest in India. If you prefer to be in both, be at both the places. It is your choice. We are here to help you to buy. I am unbiased towards both the market. Both the markets have amazing companies. Now, a lot of people who are selling Indian funds, they just promote India saying that they have a lot of young population working for India. But who has made America great? In the chair you are sitting, Deepak Bhaiya, Rajesh ji is there, is selling the American product to all the Indian people working for an Indian company. So all I'm saying is that America is a capitalism, India is a capitalist market, and these are both great markets, individual choice. Obviously heart goes with India, but then we have learned everything from America. And I think made money also through America. I'm also happy to take question on founders portfolio because it's a half yearly meet. So please ask because going forward, this will be your questions because I have nothing much to talk about the strategy per se. Please, Bhakanji.
Bhuvanji, tell me in India, have you identified the segments you are going to invest in and the total number of companies you are going to invest in?
Correct. So thank you so much, sir, for asking this question. I think he is one of the first few people that I met who are our existing client. So we have identified around 71 or 72 companies. I think 71 for now, and that will be our investing universe. We are going to increase it by 29. For the last 2.5 months, I have been doing this activity only. We will keep it to 100 as an investable universe. But I have mentioned in my slides, we will keep this portfolio limited to from 15 to 20 companies. So this question was asked to me by one of our existing investors that why 15 to 20 or why not 25 to 30. So we have been studying all the PMSs of India. One of the PMS has 86 companies in their portfolio. I'm not saying that they will not make money or they are not making money or they will make outsized returns. But like I explained, we want to focus on asset allocation and risk management. If you ask me personally, I am very comfortable in investing in 5 companies. My current portfolio, personal portfolio is in 5 companies only. I have not yet decided to invest in any 6th company, but I am ready to take that bet because my investment horizon is more than 10 years and I have different objectives in my life. But with a portfolio, I wanted to keep it to 15 to 20. Primarily to ensure that we do the decent diversification. And India has so many sectors, so many good companies, great companies that will do wonders in future. That is why we wanted to increase it beyond 10. So Bhuvan's founders portfolio is 10, but so the opportunity size in India and the numbers are so much that we don't want to miss out on any long-term journey on those stocks. So the answer is 15 to 20 companies. And we will have an investable universe of 100 sectors. We have identified the sectors we will not go beyond a certain allocation in any of those sectors. Thank you.
You still didn't tell me the segments, the sectors you will be invested
Yeah,
in.
so current 71 companies cover all the sectors. That decision will be taken at that point of time. Currently, I think in the next couple of years, IT and pharma will do well. Manufacturing is something that we have been quite bullish on for the last 3 years or so. Defense and railways, I am a little skeptical for the future growth because I think the valuations have run past the growth that will be available, but manufacturing is still has a good scope.
Here, I have one more question.
Yes, sir.
See, when you are limited to investment to 15, 20 companies,
Yes, sir.
I was invested in one such a company through PMSA scheme, and then they kept selling the company, which was increasing in the value
Yes, sir.
to keep the portion less than 6% or something on
Yes,
the
sir.
overall portfolio. With the result, what happened? Even 1% of that company at the price originally bought was equal to 7%.
Correct.
But that company was Aicha Motors,
Correct,
kept
sir.
increasing and they kept selling.
Correct.
So what do you do in such scenarios? You keep the company no matter where it goes and no matter the proportion is spoiled, or you sell it as the first company did?
Correct, sir. So, sir, there are many ways to look at it. In your example, somebody would have lost out on the growth trajectory that was available with us, because Eicher Motors is one of the storied stocks. So whenever you will read Economic Times, they will say that instead of buying 50,000 rupees of bullet bike, if you would have invested 50,000 in Eicher Motor, you would have been able to buy a Porsche and a.
But that's not
house with
important.
that.
Important is what would you do, in that
Correct.
situation?
Yeah, I'm coming to that. So, as a fund manager, we start with something which is known as mandate. So, if I decide with a mandate, which is an unbreakable rule, which says that not more than 25% of allocation will go to a certain sector, or not more than 15% of allocation will go to a company, then I will not allow it to go beyond that level if it is a mandate that I start with. Having said that, when you invest in a company and you see the growth trajectory is available, I have seen fund houses who still hold it. At present, I will start with a mandate which will talk about the sectoral allocation, but if the company is going beyond a certain level, we will not sell that company. So suppose we have two companies from same sector, and one company I see that growth trajectory is available, in your case Eicher Motor, and I also had Bajaj Auto. I would be happy to sell Bajaj Auto and let Eicher Motor have its run. That is what my
But
strategy
that's
is going to be.
your decision now that you know both companies, how they
Yes.
grew.
Yes.
But what would you decide in a
Correct.
scenario?
That's
You
where
will carry 15, 20% in one company?
That's what I am coming to, that if I see that the growth is still there. Like I have heard at least 3 stories the last 3 days. The single stock that people are talking about is Mazgaon Dock. Somebody had sold it at 1500. Somebody I think sold from here only at 2500. The stock is at 6000. But I was privy to it that Mazgaon Dock will have a larger run. Some people have sold it at 600 also, but they were very happy at that time. If I have that kind of vision that yes, it will go up, I will keep it with me, because any which ways it will not go beyond 600 and my cost price was 300 rupees. So I will have that run. Having said that, sir, what I am discussing here will get into mandate. Mandate is going to be at the sector level. If it goes beyond that sectoral allocation, we would start selling it out.
Then all your companies that you are invested in will be visible to us, or those will be not visible to us?
They will be visible to you every month. Monthly NAV will be there.
So we will know what you are carrying.
Yes, you will know what we are carrying. You will know what kind of cash we are carrying and what kind of investable amount is there. हाँ जी, इधर सर पूछ लो.
No, I don't need.
Yes, sir. 15 to 20. We will start with minimum 15, and we don't intend to go beyond 20. Correct, sir. That is what the strategy is. Correct. Sir, it is not going to be a journey of 3 years or 5 years, and also it is not going to be a journey which will take somebody from small cap to large cap. It's a step by step process. In small cap also, so India is a market which is very kind of interesting, because how we define large cap and mid cap and small cap also keeps changing. So a company which 5 years back was supposed to be known as mid cap is actually a large cap now. From that definition, already a large cap, but it is still categorized as mid cap. I will tell you the way it gets calculated. So as per AMFI, which is basically the mutual fund body, it says that a large cap is the first 100 companies. And then the next 200 companies say are mid cap, and the rest of the companies are all small cap. Now, it is not very easy, but it is easier for the 301st company to go into the top 300 and become a mid cap. But I am not talking about those mid cap conversions. At the same time, a company which has gone from small cap to mid cap, as per the 5 years back data, is actually a large cap now. So it is in our mind that how we are seeing it. At the end of the day, we want to generate a return which will beat the market by probably meet the benchmark that we will decide on. It doesn't necessarily mean that all our picks will convert from small cap to mid cap and mid cap to large cap, primarily because of the definition itself. Because you can't have companies that will go into the top 100, because top 100 companies will again then grow to a certain level. So that is not going to happen. But what we aspire to do is, in terms of market cap, their market cap in today's terminology should reach those levels. So in US, you call a mid cap company from $1 billion to say $30 billion. But here the definition is not like that. Definition is top 100 are large cap, then mid cap, and then small cap. Sir, charges and fee, I think Bhuvan would be a better person to answer it.
So just to tell you, he's part of the research team in Client First Capital for Founders Portfolio. I am heading as a CIO at the level of India Fund, but obviously I would like him to handle it because I'm very busy with Founders Portfolio. The fee has been 1, 5, and 20. The fee will be same for all you. So 1% fixed fee for any given year, 5% hurdle on the profit year, and 20% performance fee. And at the end of the day, we will try to maximize your return there and here as well. That's the whole idea. The 1% fixed fee, 5% hurdle, and 20% performance fee after the hurdle.
So hurdle is 5%.
Yeah.
So you're saying the return post 5% will be charged at 20%.
Yes, on the profit year. Huh? Taxation has to be paid by you. And that is why in the founders portfolio, I pay the tax. So I think that conversation I had with Anil sir, so any dollar fund will be basically will be paying tax on behalf, but it is not post-tax, pre-tax. Having said that, long-term capital gain tax is just 10% or 12% now. So as 12.5, just I'm saying that when we're not selling and buying enough, it's hardly a 0.5 to 1% difference on the overall alpha. And obviously with the secret ingredient, we would like to generate great return, but I don't want to talk about that return because then you know what happens. You said 18, you made 17.5. And I don't want that situation. I again repeat here, if you are happy with 15% dollar return, is not what we're looking at. We have done better than them in the past in FP. We will definitely do much better than that in the India fund. The reason is your profit is our profit. Huh. So sir, for that I think you should speak to our admin because we are more focused on the strategy. So the question which you have is on the admin side. So I'll send you the PPM.
One quick question.
Yeah.
Our profit is your profit, then why you're charging 1%?
No, our profit means after your profit is my profit. No, if I don't make you money, not your, if that would have been the case, actually you should go and check in FP how much I made. So the one good thing is you have seen a transparency. I wish I could have given you that kind of transparency in Mauritius with the India fund, but unfortunately Indian regulation does not allow it. I also would like to someday convert the FP as a fund, but I'm not really in a hurry. But having this transparency of showing you a stock and all is not important. What's important, you understand the process. The idea is to make you money and not to explain you each and every stock we bought. But I think that trust now you have on us. Okay, so obviously it's a very good question, and even in FP, I can have an S&P 500 or I can have the world index. Let's not get into this benchmark discussion. Yes, he rightly said we would like to beat the benchmark, but then what happens that fund manager becomes very short-term focused. Now, how do we beat the benchmark? First, understand that. And it can always be a weighted average of the large cap, let's say, for example, Nifty, and it could be a weighted average of the mid cap, let's say, mid cap 100 or whatever. But let's understand how we beat the index. So index is what? Let me ask you a question. S&P 500 is an index, right? Anybody can explain me what is index? It's a what basis? Market cap. So now if a market cap of Apple is $1 billion and Amazon is $1 billion, it will be average, right? But if it is 2 billion at Amazon and 1 billion at Apple, how will be the market cap? Weighted average, correct? Now, index is a weighted average of best companies. Is that statement correct or false? False. What is the correct statement? The index is the weighted average of the biggest companies. Now, how to beat it? You analyze these companies based on the quality, buy those quality companies from the index at a good or fair price and hold them. You start churning to show quarterly, or we do not have quarterly target. We don't even have yearly target for the profit. And that is why churning is low. So, and we are not in the compulsion of having a stock at 10% or 15%. Case to case basis, we will see it. As Bhagwanji has asked, that if the company is solid, like Amazon has more than 50 businesses. Apple, which was not doing well for some 3-4 months ago, and then suddenly they have talked about AI and it has gone up. Tesla, similar stories. And there are now talking about this what you call the solar wall, which is going to become the AWS of Tesla. So all I'm saying is that this benchmark beating business, it looks very nice, but I'm a bania. I don't want to beat anybody. I just want to make you money, and definitely index will be beaten as a byproduct. And that's my answer to you on the benchmark. I hope I'm clear enough.
Why your hurdle rate is only 5%?
So, sir, we can actually increase the hurdle to 7% and charge you 1.8%, which is what the fund managers are charging. We are comparing ourselves with hedge fund. 220 is the structure. My fees are lower, in fact. Obviously, it is not low as ETF. Obviously, then we cannot have these meetings. It will be all in the Zoom. Now, it's not about the hurdle. It's not about the fees. It's about understanding what we're doing here for you. So let's understand tomorrow you and I start a business of property. And I'm having good experience in property. So Kapil is here. Kapil, if I start with you a property business, you are a working partner, what kind of profit you would like to have in the company? No, what? 15, 5, 10, 20, 50? 50. I am putting the money, you will pay 50%. So, how much profit you will take? I'll put the money. Correct? Correct? So, if you start a working partner relationship with a good guy, I hope you consider me as a good guy, it's a 20-80 relationship. And there is no answer to it. Any fee could be great, any fee could be bad. There are people charging 4% fixed fee and 30% profit sharing. Yeah. We have done fair analysis of all the dollar funds available. Now think about it, you are down for 2 years and somebody has charged you 3% fixed fee, which majority of this PMS charges you. Now what have you lost? You have lost 6%. Now when you have to come up, as a very good example, 100 goes down 20%. What is the value? 100 goes down 20%, what is the value? 80 goes up 20%, what is the value? It's not 100, right? It has to grow how much to become 100? 25. So in the down year, I am charging you lesser. In the up year, I am having party with all of you. Obviously, I'll not have the drink, I'll have the Jain meal. But all I'm saying is I'll have the party with you. So fees are something which is very debatable, but how do I come to my fees or how do we come to this fees? We've done the analysis in the Indian fund. We found many of them charging you higher fixed fee, where our fixed fee is lesser, one. And then they increase the hurdle, then they charge you 20%. So I can share the fee, Rakesh sir, with all of your funds, you can check it. How we have come to the fee, the ground rule book is outside. Warren used to charge 6% hurdle, 0 fixed fee, 25% profit sharing. I wish I would have done that. But then you know the expenses today are not like what he used to have in 1957. He opened a company and just started as a partnership. Here we have to pay the regulatory cost and everything else. And rents have now increased for the next year. Having said that, everybody has to be paid. We are still doing our work even if the year is down. So our fees are very much in line with the market. But I guarantee you and promise you, it is cheaper than the market one. And people, I think, who have invested in the Indian market, they should speak about it. Because there are some investors who already invested in dollar fund in India, and they can tell you the fees which they are paying. Correct? It makes sense. It is good to hear from people who have done that. Further, any question? Bar is open. Please help yourself, have a drink, come back, because we want really you to enjoy the summer. Yeah.
हाँ जी करेक्ट हाँ जी No, mortality risk is with the associated with the company, like a Yes Bank kind of a company or a Suzlon kind of a company that goes from say 400 level to 10 rupees. So we don't want to invest in those companies like a Satyam case. We want to avoid those companies, and for that we have a 72 points checklist, which will ensure that those companies do not get into our investable universe. And that is what I meant by mortality risk. So whenever the risk management, you talk about risk management, there are different kinds of risk. Like there is a qualitative risk, or there may be management risk. Many a times we find that whenever there is a in the transaction of cash between subsidiaries and the listed entity, then we want to avoid those kind of companies. There is a sudden spike in the fee that the auditor gets paid. So one of the ways to look at the management risk is when if you see that auditor fee has suddenly increased, but the growth in the company revenues have not increased to that extent. So we want to avoid those companies. Those checklists allow us to take those companies out of our investable universe. And yes, I would again say small cap is not the highest risk. Risk can be in large caps also. So there is a company called Vedanta. People have made a lot of money. I will not invest personally in that because that management, as per me, is not true to the minority shareholders. They wanted to delist that company at 86 rupees, and they have already paid 180 rupees of dividend after that. So you can think about the intention of the company. We are very lucky that we have a company called LIC in India, which vetoed that. If there would not have been an investor like LIC, that company would have got delisted at 86 rupees, and that person would have got 190 rupees of dividend in his pocket, already given to the share, and the stock is at 400. So you think about the value that the company was having some 5-6 years back, and the kind of fools they wanted to make to the minority shareholders. I personally avoid such kind of managements, and we will also avoid it here.
So just to add, Ganesh, we are small cap, low risk. So do you have any other question? I have just one. Okay, please. Yeah, so I have told that, sir, earlier also. I'll repeat. I think we have been discussing that. So against the benchmark, which is made roughly 11 to 12 from 2020, we have delivered roughly 18% return. But I think your question is different because you came in a different time zone. Okay, sir, okay. 18% as vis-a-vis 11% from the S&P from 2020. The answer is that. 6 to 7% of the alpha. Thank you. Now, last question, I have prepared a slide also. I think you would have been asked this question, but I have not been asked. Now, you may say market is still all-time high. How we will deploy your money if you will give us more money, specifically for FP perspective. Now, since in 2021, what lessons we learned is that investors say 5 years, but they want to see their money up. You are a busy person making money for your household, for your company. All you want to see your portfolio up. I've seen behaviors. Obviously, many of you have agreed to stop or exiting when the stock portfolio is down. But obviously, getting more money from you is difficult when the portfolio is down. There are some investors in this room who have given money in that time also. So we have learned this lesson and increased our work a little bit. But when today you give us the money, let me show you some industry. I have not been showing you the company because the idea is you should not try this at home. See, you might like the idea, you go and buy, and then tomorrow I've seen this situation when you come and say, "Arey, मुझे तो पता नहीं था, but मैंने ले लिया." So there are some 6 or 7 industry where we have identified these companies, roughly, let's say 60 to 70% of FP portfolio, where the valuation is below P20. Now, why P20 is an important mark? Anybody can answer it? The 10-year treasury rate or fixed deposit, long-term fixed deposit rate is roughly 5%, right? 5%? 5% earning yield turns out to be roughly 100 divided by 5, which is P20. All the assets in the world, they compete against each other. If you buy something below P20, the book outside called What I Learned from Darwin About Investing by Pulak Prasad, you should take a photo and definitely read that book. So if you buy a company, which is a quality company, high growth company, at a valuation below price to earning 20, it's very highly likely that in the next 3 to 4 years, you double your money. So we have identified companies from valuation of 7.5 to roughly 18, which are return on capital employed, which I will request all of you to know, and if you can read the annual letter, you'll find it there, of last 5 years. In the long run, any company's profits or the shares growth is equivalent to this. So if it's growing at 18% for us, it'll double in 4 years. So the profitability measurement is not the earning profit, but it is the return on capital employed. Great quality, great past track record of CAGR, and that company is available at cheap. And then we are waiting for bubble. So please don't wait for bubble. This is the situation, that's how we have been investing. Thank you so much. I think the time for two gifts. So let me ask you a question. And I am known to ask this question. Who established Indian stock market? Bombay Stock Exchange. Are you seeing what my point is? Okay. Who is known as a big bull of Indian stock market? Ganesh ji, please come. Kya kare? We have to give the gift. So I have to ask question which you like the best. So Mohan, thank you. Please. The person who established the Indian stock market name is Roy Chand Jain. So you should know that as well. Second question, and it is very easy question, but before that I'll answer the last question. I ask you a question that which was the first bankrupt company in the world? Now you know the listed company because we have asked this question. The first bankrupted company in the world is Dutch West India Company. Okay? And this is in the Peter Lynch's book, and I think this history has been kept hidden from us. Now this question, which I think is a very easy question. Before independence, which was the capital of India where East India Company, the Dutch East India Company, let me, so the question, okay, so this question is void. Because everybody answered. Now my favorite question. $1 million, and this is the painful question, growing at 24% year on year, will grow your money how much in the 20th year? कौन बोला? Hitesh, please come. आ जाइए. क्या करें? At least you answered it. I know you are a banker. You will know this answer. But that's what we are doing it here. You do. Please give a big round of applause for him. It has to come very fast. By the way, he also was with me. He witnessed Berkshire Hathaway conference last year or this year. I request all of you to join me because you're still thinking stock market, kya hai, kaisa hai. But Ashish ji, Anil is now gone, but I'm just telling all of you, you have children in the US, you go to the US, same week you are there, but you don't come to Baksharath event. He's 94. He is telling all of us to learn investing and make great money. And the good point is that you don't have to even meet a broker. And you money don't have to buy and sell. And some of the investors, some of the local Warren Buffett are sitting here. I can see them. They, they have been very good family offices. Talk to them also and take their advice. Thank you so much for coming here. Let's grow the company together. Bar is open. We are open for all your questions. A big round of applause for Client First team. Thank you to all of you. I think it is one of the most impactful event. And I think India is what is now burning in your heart. We are here for your question. Please, all the team members, please come. We'll take a minute of more from you. Can you call Manish outside? Ichita, please come fast. Yeah, Anjana, Rachna. Rachna has been calling you again and again for everything, so please meet them also. They have been very diligent and hardworking. And the only reason I want to list after you making money for you is to make them also $1 million. I will never exit this Client First Capital. Big round of applause for my team. Thank you so much. Thank you. See you at the bar and the dinner counter.